So it's urgent measures. That's things, legislation which were set up during war time back in the 40s to give all power to the Federal Council. So that really means we are in a situation where any legislation, there is several legislation which are actually overpassed. There is anti-takeover legislation which is overpassed because certainly the anti-takeover Commission would have never accepted such a deal, and the merger and acquisition regulation which are surpassed by this decision of the Federal Council. So I'm not believing when our ministers say there is no intervention of the Confederation, of the Swiss Confederation. There is actually, because they are actually making it possible by putting set aside two very important legislation.
Vincent, I want to get into what went wrong. I mean, this is a bank around for 167 years, seen as important to Switzerland, important to the Swiss economy. It survived the last financial crisis. But if we look at what went wrong in recent years and some of the issues that you had to engage on, excessive remuneration, excessive pay at the board level, Archegos, green cell losses, more recently around the stepped up concerns around risk and compliance and the reset of the bank, ultimately, were the problems just too great to fix?
Yeah, I think we've been struggling and engaging the board and also other shareholders. We have made our voting recommendation very often publicly. Already back in 2011, I think that's where we can search for the beginning of the end. I think, yeah, you're right. CS went quite well through the financial crisis, so didn't really look at its business model to see if it was the right one and continue to bet on its investment bank. And I think there was no shakeup of the culture under the Dugan's year. And Rohner, honestly, the former chairman, had no control over the management. It's a big disappointment because I think we said many things over that years. I think Thiam had a good idea with the split off of the Swiss bank. I don't know why it was not done in 2017. That would have helped, I'm sure. But anyway, we cannot look back to the past. Now we have to look to the future and see how investors, shareholders, and also clients of both banks will be preserved with this merger. And also the employees, of course, of Credit Suisse, because here that could be massive layoff with the combination, especially in Switzerland. Why not still getting one of the division out of UBS when the situation will be stabilized? I think there is emergency now. We need to stabilize the situation, but at a later stage, maybe there would be of interest for UBS to spin off some of the asset acquired.
Vincent, a slightly different question. The Swiss political system allows for direct democracy. If there are 100,000 signatories to a campaign to block the government's support for this deal, that would be another way of tackling the merger. Is that something you would like to see, or would you rather it didn't happen?
I think that would not work against such an ordinance decided, but I'm not, I have to look at it. It's a little bit too early. We need to look at it. But I think, honestly, we will see also how the market goes on. But my suspicion is now the Federal Council tried to avoid the Lehman Brothers case in 2008, which actually started the financial crisis. So I think if if the Federal Council would have let down Credit Suisse this morning, we would have had the beginning of the crisis. Is it just a postponement? I don't know. We need to see. I think there is larger roots. With the financial crisis, we had some measures to reinforce capital of banks, which is good, but we always say it was insufficient. I'm not sure we worked enough to make the financial product more safe. I think the financial product in the whole financial industry have become more and more toxic. And while the interest rate environment was low, was fine. But now, with the increase of interest rate, I think there will be further effect. Let's see how the market react today, but I'm a little bit pessimistic this morning.